Hey, what's up, guys? I want to talk about, I've been posting and kind of sharing a little bit about the current state of the real estate market. And if you're paying attention to the news or the media or anything, if you're an investor or not an investor, I'm certain you've heard talk, chat, ideas, doom and gloom, whatever it is pertaining to the housing market. Is it going to crash? Is it not going to crash? Are prices going to stay stable? Are they going to increase, decrease? So I've been doing a ton of research, looking at articles, data, combing through data, looking at my own markets, and I have 10 active students buying deals right now in markets across the country. So I kind of have a bird's eye view of what's happening in some of the individual markets, and these are some of the more popular markets in the country. So first and foremost, obviously we all know that the red hot market, right? Like just 6 months ago, the market was on fire. Seems like it has totally come to an almost screeching halt, right? Like in just the last 6 weeks, things have just cooled off. In July, it seems that houses were still in bidding wars, right? Going to the highest bidder. And I know because I was putting in offers and I was seeing this in my students as well. And we were seeing houses just in this just bidding war, no matter where you were buying or whatnot. And now here we are, towards the end of September 2022. And we're seeing things like sellers are starting to drop prices. Homes are sitting on the market a little bit longer. We're starting to see things like seller concessions, which was like a thing of distant memories just a couple of months ago. Those things are starting to make a comeback. I posted the other day about a student that is in a deal right now where he was able to negotiate a really cool seller concession where the seller gave him an $8,000 credit, which was really cool. And we didn't think it was going to happen. The seller had backed out, then they came back to us. And so things are happening like that now. So I want to answer a couple of questions and then I want to give you guys some solid things. So I've got some notes here, just kind of some data points and some things that I'm going to share about. What changed, right? Like what has happened that has changed? We know that the Feds are raising rates, and I believe today they've raised rates by like 1/4 of a point or 3/4 of a point. I haven't looked exactly at what the Feds released today. What does it all mean, right? If you're not a real estate investor, maybe you're just a homeowner, what does it mean if you are an investor and you currently have properties or you're wanting to get into the game and get started? These are all things that I'm paying attention to. And then ultimately, how does this affect you, whether you're a small or large investor? So there's some data. I really like to dive into the data and not speculate and not let emotions dictate and control how we respond, how we feel, because a lot of that is happening. And to be honest, if you know what you're doing, I think that response from most people, especially frantic sellers, is going to create amazing opportunities. Some of the data, right, as I start to kind of unpack and answer some of those questions, it's interesting. In 1981, the New York Times ran a story. Yes, this was when they actually ran stories, right, not fake news. They did this piece titled "The Coming Housing Collapse is Already Here." This is in 1981. The whole idea was that the Federal Reserve's fight against inflation, kind of like what's happening now, which pushed mortgage rates. Now, listen to this. At that time, rates peaked at 18%. People are freaking out about 6 and 7%. We're talking 18% mortgage rates, right? The premise of the article was that push by the Feds to fight inflation, which resulted in mortgage rates hitting 18% at the peak, that it was going to burst the housing bubble. Sound familiar? Right? Like, doesn't this sound almost exactly, except rates are way higher then than they are now? The doom and gloom and, people talking the sky is falling and this, that, and people are bringing up 2006, 7, and 8 and whatnot. And I don't think that's the case, right? In the end, those types of stories, they sell newspapers, they drive clicks, they get people talking and whatnot. But more often than not, those are not rooted in facts and data. They're not rooted in actually what's taking place, the data, the factual basis of things. So while home sales, right, and home building did plummet in the 1980s, the predicted housing crash never happened. That doesn't mean that it won't happen now. I'm not one of those. I'm not saying that. I don't like to predict the future. I like to look at data and understand what is happening and recognize how can I navigate around that and develop strategies. Because the truth is, in that housing market in the 80s and the housing market of the 90s, housing markets of 2000s, the 2006 Great Recession, the truth of the matter is people made money in every single one of those markets. It doesn't matter what happened. And if we understand how to navigate and what to recognize, we can do the same. So Zillow still predicts that the vast majority of regional housing markets will see home values rise in 2023. In total, Zillow is forecasting that 640 615 markets are poised to see higher home prices. And we're seeing this in a lot of the markets that we invest in. The markets that we're investing in are among those 615, as a matter of fact. Now, another 22 markets are saying are going to kind of remain flat. To understand this data, Zillow looks at around 890-ish. I think it's like 893 to be exact. What they call regional housing markets in their assessment. So 615 of those, according to Zillow, are still poised to increase. Now that could change and, things could happen, but the truth is that's over 60% of the markets that they evaluate as far as regional housing markets, right? And I share this because there's a really key point in this that I want you to take away if you're watching this. If you're an investor already, if you're a newbie, if you're waiting on the sidelines to get involved, choosing the right market is tantamount to success. And as an investor, we spend about at least probably 3 to 4 weeks when I work with my students privately, understanding how to look at markets, how to analyze what's happening in those markets, what is going to happen in those markets, how do we pick markets that are hot, where the right things are going to happen in there to ensure that we make money, that we benefit from appreciation, from growth, all the positive things, right? It's interesting because this is something that a cash flow investor doesn't usually pay attention to. And you've heard me rant about why we don't buy for cash flow, right? But usually cash flow investors, they're not paying attention to these things because all they're looking at is, are we going to make positive cash flow? Where can we cash flow? And that changes the parameters of how you look at markets. Now, according to Zillow, like I shared, almost 60% of markets are going to see growth. That's pretty high. That's pretty exciting, right? Now, why that is and some other data, then I want to give you some data. We are still dealing with almost 10 years, right? The years of like 2010, 11 through like 21, 22-ish, give or take a few months span in there. Record low new home building, which has resulted in kind of why we've been seeing the really crazy boom we have, because inventory's been low and demand is high, especially in areas like where I live and where I'm investing in Florida, where I have students in North Carolina, Georgia, South Carolina, Oklahoma, some of these areas like that, Texas. People are just flocking in droves to those areas, and inventory's been low. Now, Fed is concerned with inflation, and they're raising rates at a very aggressive rate, and they did it again today, which in turn, what that results in, it's pushing many of the prospective home buyers out of the market. And if you've paid attention and followed me, I predicted this a few months ago when the Fed started raising rates back in like February, March. I said, this is what's going to happen, and this is what they're looking for. So we're not surprised, right? This is what we knew was going to happen, and we have anticipated it and navigated accordingly. Now, like I said back then, I'll say it now. Those former home buyers, right? Those people that were in the market looking for homes, but because rates got so high, maybe it's pushed them out, maybe they've paused their home search, whatnot, for whatever reason, they still have to live somewhere, right? Like, they're not going to be homeless. They got to live somewhere. If they can't buy a house, what does that mean? Well, they're going to have to rent. And this is why being an investor in the right areas with the right strategy, who understands what they're doing, the demand for quality, affordable, well-maintained properties is going to continue to increase. I'm seeing this. We literally are having applications for all of our properties within days of being finished with them. Like, they're literally not done. My crews are there. My guys are calling me and say, hey, somebody was here. They want to fill out an application to rent the property. And in some cases, we don't even have to list it on Zillow for rent. We've already got a lease signed, deposit paid. It's ready for move-in. And every single one of our properties is at top of market, and in some cases a couple of $100 above what some of the estimates, or zestimates, if you will, which I don't usually go by, are for rents in that area. And that's because demand is so high, and we do a great job of renovating, which is a key to being successful as a real estate investor. These new renters, like I shared, they got to live somewhere, right? Their home ownership dream is kind of slipped out of their hands, at least in the immediate. The theory is simply that there's just too few houses on the market, too many people that want them. Again, supply and demand, kind of what I talked about. For example, millennials are a much larger generation than the preceding ones. So there's more of them hitting the market, home buyer age, family age, right? And then, as I shared before, builders didn't put enough homes. Like, they weren't building in like 10, 11, 12, 13, 14, through to like before COVID at the level that they potentially probably should have to meet the needs that have hit the market. And so now we've got a little bit of shortages, and which is why our rental properties are commanding top of market rent and are taking just a couple of days at max to fill. Last week when I had posted, I shared some things about, even as home prices might slip, buying might cool off. one thing that will not retract and that will not go down is rent prices. And I was talking to students about this because if you look historically, rent prices always go up. They're not like home prices, if you will, because if you go into whatever area you look at, right, there's no standard for how much somebody pays monthly to buy a house in a certain area, because that mortgage payment can be dependent on all kinds of different factors: their credit score, how much money they put down, interest rates, purchase price, right? So there's no like, okay, to buy homes in this area is going to cost you $2,000 a month per se. But rents can be that, because it's a solid number. Boom, to rent a house in X neighborhood, it'll cost you $1,800 a month. That's the going rate. That's not going to come down. And it doesn't. Historically, that number never comes down. It only goes up. That's why this is good for investors. Personally, I believe that what is happening has created a prime window for savvy, smart, well-trained investors that kind of know what to look for, how to navigate the market, and understand what they're doing to pick up deals from scared and inexperienced sellers. Right? A lot of these sellers are responding to fear. They're humans too, right? They're subject to the same emotions as all the rest of us. Understanding what's at play to navigate a transaction with this new info, right? And what I mean by the new info is understanding that these sellers are hearing the same doom and gloom, and most of them are responding to that. They're acting out of fear. They're scared they're going to lose their house, or their property value is going to go down, or these things are going to take place. And so they're jumping on the first offers. That creates a really good environment to negotiate, especially if you have done your due diligence like me and my students have, understanding your market. That is key to making all of this work well. You have to be buying in the right areas and understanding other factors that take place in those areas. Understanding that new info is going to unlock potential for amazing deals. We're seeing it right now. My student that I just shared, they were able to get the property $15,000 less with a seller concession of $8,000. This wasn't happening 6 months ago, but understanding the climate, understanding what's happening in the market has put us in a position to be able to negotiate in those ways, right? I mean, that's just what's happening in the market. Now, while it's true, right, that the market doesn't have the same momentum that we had in the past, right? There's still plenty of qualified buyers out there, right? Even though the things aren't moving as quickly, houses are staying on the market a little bit longer, DOM, which is days on market, which is a big indicator that, a lot of the data and, research areas look at when they determine cooling and, hotness of a market. Days on market's probably one of the kind of standard factors that they're looking at. While that may be getting higher, there's still lots of buyers out there that are willing to pay for a properly updated home in a high demand area. Like, sales are still happening. This is sort of a prediction, but this is kind of what I project if this happens. If the Fed stops raising rates before the end of this year, I don't know if they will. Maybe they will, maybe they won't. I think we may see a quick turnaround and increases again. We may see things start to pick back up, even in some of the slow areas, coming into 2023. If you're watching this or reading or whatnot, and you're a flipper or looking to do your first flip, I'm not a flipper myself. I have done some. I'm not a fan of the model because it's more like a job than truly investing. But if you are, make sure that you put a lot of effort into finding an excellent deal, and that you're knowledgeable about how to make the best flips, right? What type of renovation standards, finishes are people looking for? What's going to ensure that your house doesn't just sit on the market. Make sure that you know what you're doing, right? And this is true. We're seeing this in lots of different markets. Now, while that's happening, what I'm also noticing is that many of the fly-by-night investors are starting to disappear, leaving opportunity for more savvy, more established investors that know what they're doing, know what to look for, know how to analyze the market, and have confidence to determine, what's going on and how to properly analyze deals on an individual basis, how to back into their numbers where they're not just guessing and just throwing some random number out there. I'm seeing this in my market as well as all of my student markets. Interesting, because properties that were attracting newbie investors who tried to bid them up in this attempt, right? Like I noticed in the beginning of the year, January, February, March, April, what was happening is that deals that we were trying to buy, they were getting bid up above where we knew was a good number to pay for that property. And I'm not going to get engaged in a bidding war. I have a number, we have a formula that we follow, a very specific process, and it keeps us safe and it keeps us in a good area where we're buying only amazing deals, right? So I knew what my buy box, if you will, was. And I noticed that these newbie investors just kept bidding up certain properties because they were chasing that they just want to get their first deal. Well, I teach all of my students that you will be better off to properly wait and analyze and do the right deal than to just do a deal. Because a bad first deal can put you out of the game for a long time. Getting that first deal right is tantamount to continued success. Not just for the money side of things and the growth and all that comes with buying real estate, but also the confidence, right? If you get hit, in your gut immediately out of the gate, you're not going to feel very good, right? Next time going in to buy a deal. So lending's a little bit tighter, right? We're seeing that as well. Lenders are, kind of making it a little bit harder for these newbie investors, which I think is a good thing, to get financed if they don't already have experience or have a connection, which my students can alleviate that because I directly connect them to my lender and they're in the game. They're already there. There's already a connection and established relationship. Let me just say this. The roof is not falling, people. Lots of other economic indicators are positive. There's other things that are going on. And it's ones that people still have jobs. Jobs are growing in lots of areas. And a lot of the fundamentals are in place where maybe we'll see a cooling, maybe we'll see some flattening. It depends where you're looking and whatnot. But if you stick to the core things and you're conservative and you know how to analyze deals and you're looking at things properly, you're going to do really well. And I think the opportunities are about to start abounding. So in kind of wrapping all of that up, I wanted to give you some, I guess we'll say bullet kind of ideas of just some solid takeaways, right? Number one, the most important is to know your market. I shared that when I started talking here. It is important to deeply understand demand, inventory, growth drivers, and rent prices in your specific market, and to deeply understand them. And I mean have an intimate relationship with your market. What's happening? What are the big job drivers in those areas? Where are rent prices currently? Where can they go? What are the income levels in those areas? What is population growth, job growth? What are those things that are happening in those areas? Because ultimately we buy real estate for appreciation, not for cash flow, and that is going to be one of the biggest drivers of that happening. The next one, be patient. The last thing you want to do is get out there, hurry, and just try to get your first deal and do it wrong, and or buy a property at the wrong price in the wrong area. So be patient, right? The deals are there. Look for the negotiation opportunities, because I genuinely think that those are going to be plentiful right now, and they can be created. Lots of sellers are going to be emotionally responding to what's happening and what they're seeing. So respond to that. The next one, and this is probably one of the biggest ones, is focus on great deals. Analyzing deals, I firmly believe this, and I teach my students, and this is an area where we develop patience, and when I instill this in them, I think this is one of the most valuable skills that you can develop as a real estate investor, an investor in general, someone looking to build wealth. Analyzing deals, right? Proper analysis will make all the difference between finding a winner and getting stuck in a flop. Opportunities abound, and I said that, and they're going to continue to come out. We're going to see more and more of them. Hone the skill of analyzing deals. If you're not comfortable, get good at analyzing deals. The last one is, and I share this, and this is going to be my soapbox for all eternity talking about real estate, and that is appreciation over cash flow. I cannot stress this enough. Cash flow will not make you wealthy. Appreciation will. This is the time, right? I think the opportunities that we're already seeing and that are going to start coming out over the next 6 to 12, even 18 months are the times when new wealth is created. People are going to look back in 5 years and go, man, I wish I bought real estate. Just like right now, I look back and like, man, I wish I would have bought properties in 2010, 11, and 12. Well, that's not going to happen to me in 10 years. In 10 years, I'm going to look back and like, man, I'm so glad that I bought as many properties as I could in 2019, 20, 21, 22, 23, whatever. Because that's how real estate works. Like we all know, when's the best time to buy real estate? Yesterday. When's the second best time? Today. You have to look for and know how to put deals together the right way. I think the next 18 months are going to be incredibly fun. If you have been watching and kind of sitting on the sideline, you're hearing things and you're in a position you want to start investing in real estate, you don't know how, I am opening up a group opportunity. I'm looking for 5 students where I will walk you through, handhold you through the entire process, start to finish. If that's something that you're interested in, you can comment on the video, wherever this video is, whether it's Facebook, YouTube, whatnot, or you can send me a private message. We can chat a little bit more about the details, but all of my students have had success. And I think above all, the reason is because they don't get stuck. It is designed to get them into action, implementing, moving forward from the first step, understanding how to analyze the market, then analyzing deals, then how to build your team properly, how to create a situation where you have a team and you're able to invest even thousands of miles away from where you live. As a matter of fact, I think I am probably the closest to my deals of all of my students. Most of my students are a few hundred miles minimum away from their deals, and it works best that way. Again, in wrapping up, know your market, be patient, focus on great deals, and remember appreciation over cash flow. And if you're interested in getting started investing in real estate, shoot me a message or hit me in the comments below, and I will answer, or I'll catch you guys there on the next one.